Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Wednesday the 21st of December. Now we've had a lot of volatility in recent days. We're starting to see markets settle a little bit, but we're still seeing the legacy of these moves, and we're going to be looking at dollar yen with that BOJ move there yesterday. Starting off with that, and also looking at the gold price and looking at the S&P 500 futures. So straight into it with this dollar yen chart. Now we've seen this big downtrend playing out, and this was a massive bear candle, massive negative candle that we saw yesterday as the Bank of Japan widened its yield curve control target for the 10-year. The 10-year yield can move around up to 0.5% either side of zero, and that drove dollar yen lower, yen strengthening across major forex, and that was significant. It's starting to settle down a bit, but look at this on dollar yen. To go out one more level, this support here, this reaction low at 130.85, that was the reaction low that we saw back in early August. Now yesterday's low was 130.57, so basically hit that low and then started to rebound a bit, and you've got the RSI from 30, but it's not exceptionally stretched. But look at this on the 4-hour chart, it has picked up slightly, and I was sort of saying yesterday about whether this was the moment at which we start to see a little bit of a near-term rebound, because such a sharp move, you do quite often see a technical rally, but just how far can that rally go? Well, I've got the resistance here. Initially resistance coming in at 133.60 up towards 134.50 on this 4-hour chart. You can see this barrier of overhead resistance here, and any unwind back towards that, I think that unwinds that 4-hour RSI back towards 50 area, I think would be a sort of an unwinding move that then gives another chance to sell, because it does look as though that this was a big move by the Bank of Japan that essentially may be the key outlook shifter for the yen moving into 2023. So we've got this strengthening downtrend, you've got the falling moving average on the 21-day there, negative configuration. That all points towards any rallies being seen as a chance to sell, I think, on dollar yen. And I think that further testing ultimately of that support around the 130.50 area comes into play. And beyond that, you're looking at the next reaction lows that come in around the 126s, 127. So yeah, that is a massive level of support there on dollar yen. We also saw on the back of the BOJ move, we saw precious metals strengthening. Well, you saw the dollar initially strengthening, but then weakened slightly. But essentially what we are seeing is that precious metals have rallied. Precious metals have rallied towards the resistance that came overhead about a week or so ago. 1824 was the resistance on gold. That is the resistance that is being tested or was eyed yesterday. But look at this positive configuration on momentum, consistently positive. You could argue there is a very slight argument for a small negative divergence. I'm not sure about it. I don't think it's that prominent. I think the RSI holding up above 50 is probably the more important factor here, and you've got this uptrend that I've slightly redrawn it, but it is certainly an uptrend, multiple points of contact here, and also running along the 21-day moving average as well. So any sort of corrective move back within that uptrend is a buying opportunity seemingly. And I think that anything that unwinds the RSI back towards sort of 50, 55 area is also a buying opportunity. But I think it looks positive on the gold price. I think it looks consistently as though it's posting higher lows and higher highs, and I think that means testing of the resistances to come. So you've just pulled back from 1821, I should say, and that starts to sort of develop into a bit of a near-term buying opportunity with that RSI sort of unwinding back towards 50 on the 4-hour chart. That is to be seen, then you'd be sort of I'd be looking at that and thinking, well, that's possibly the next opportunity. You've got around 1800 is sort of a basis of a breakout support area. So yeah, I think that it would be where we'd be looking out for in gold, a little near-term unwind, but it certainly still looks as though that the buying opportunities are into weakness. And finally, on S&P 500 futures, well, equity markets broke down last week on that Fed decision, and we saw the S&P 500 futures breaking down. Now, you could call that, I mean, it's probably more defined as a double top area, but I mean, head and shoulders top, double top. It doesn't really matter. It just means it's a breakdown below the neckline, and that neckline was 39.12. Breaking down below that but then becomes a basis of resistance overhead. So we've had a little technical rally yesterday. You could argue a small bull hammer, but it's not perfect. But it is a turnaround nonetheless on a near-term basis. Sort of put it on the 4-hour chart, you can see it a bit better, where you've sort of unwound from that 30 area on the RSI. But essentially, I think it's still an unwind into resistance. You've got the resistance that starts overhead around 38.99. And I think anything sort of around that 3900 area, 3910, 3920, I think that's selling opportunity territory on the SP 500 futures, and it does look as though that this is a near-term rebound that's likely to be sold into. It certainly looks as though that the market is still, having broken below that support, is negatively configured. So selling into strength around that resistance of the neckline is the favoured strategy. To retest, essentially the low is 38.05, and then you've got 37.50 and 37.05 as the support. So I wish you good luck in your trading, and I'll speak to you soon.